Okay, so firstly, I wanted to thank everybody for joining and for taking the time out. And before I say anything, really, I wanted to say that for the most important thing for us is that our hearts and prayers go out to everybody who's been impacted, everybody who is affected, which is pretty much everybody, and certainly those who with health concerns and conditions that need attention. We pray for a speedy recovery, and we hope that this will end quickly and favorably for everybody. As quickly as it came, it should end, and that's the most important thing. And with that, I will say I wanted to thank Miriam and Daron for the opportunity and for putting together this group. It is I would say, a dire topic in terms of not only is it timely, but it's a dire topic because real estate and your home has always been the cornerstone and the foundation of a person's. First of all, it's the biggest asset that one has in their lifetime, most often, and it's your home. I mean, at the end of the day, now then there's so many memes and jokes about it that we're trapped in our home, and people who I've seen realtors post, can you see yourself being quarantined in a house like this? So a lot of jokes about it, but at the end of the day, look what's happening. I mean, everybody's being forced to stay in their home. So clearly a home is something that people take great pride in, and something that they want to protect in any manner possible. So the premise of this discussion was, and again, definitely encourage everybody and anybody to chime in, online, offline, to comment and to whatever questions they may have in real time and even post webinar over here. So I'd like to address a few of the most common questions that we've been getting over the last couple of days and certainly over the last couple of weeks as things have been progressing and changing in real rapid time. What I'm hearing from all these professionals and people who have been doing this a lot longer than I have, and I myself have been doing this for over 20 years. I've been in the real estate and mortgage profession literally out of high school. While I was in college, I was doing real estate sales and real estate appraisals and getting into the mortgage business, and born and raised in the business and born and raised doing this and seeing so many different markets. And in my lifetime, clearly I've never seen such a thing, but even the people who my mentors and people who are just at the cornerstone of trying to navigate through this, they themselves have never seen this. Truly unprecedented. So with that, intro, I would say that it's hard for anybody to predict or to anticipate. And we had a webinar this morning with somebody who's an expert in commercial real estate and commercial financing, and it was the same premise that he had in terms of the fact that the next 45 days will tell. And of course, time will always tell. I think part of what we're looking to anticipate is try to figure out what should we be doing today and the impacts that may likely, worst case, best case, you want to stress test like they do in the banking world. You want to stress test things that might be applicable to you, both from a challenge and from a risk perspective, and also from an opportunity perspective. So the first thing, and I think just in terms of trying to unpack all of this, we'll talk about just the markets, what's been going on in the markets. And what happened, the Fed has come in several times at this point to intervene and to bring help, much needed help, to bail out, we'll call it, the United States of America. So that came in a form of, we'll call it stimulus, both to individuals. So many will be eligible for a check. And if anybody doesn't know how much they're eligible for or how much they could anticipate, I can send you a very quick calculator to figure that out. We're actually working very hard to create an entire resource center just for home ownership and the impacts that it might have on people and things that, anything to do with housing and with personal and professional income, just a resource center. And hopefully that'll be up soon, and I'll disseminate that information separately. So from an individual perspective, people have been getting certain stimulus that will soon be hitting their mailbox in the form of checks. But separately, what the Fed did was the Fed stepped in on round one to lower the Fed funds rate to 0. So that immediately triggered, an alarm and the bells for people to say, well, rates are at 0. Well, that's great. And what happened on our end is we've been getting flooded with phone calls. Interestingly enough, for refinancing and even for purchases. Interestingly enough, when the Fed lowered the Fed funds rate to zero, they weren't talking about mortgage rates. They were talking about the Fed funds rate, which is the rate that the banks lend to each other overnight. And they separately with that bailout plan was just adding liquidity into the banking and into the mortgage banking world and lowering the reserve requirements and the leverage requirements and the collateral requirements, which forced banks to put in certain safety measures to protect themselves from the catastrophes of what happened in 2008. So that was because there was a liquidity, there was like a run on the banks, not people running out and taking their money out of their account, but similar to what we've seen with toilet paper and some groceries, where everybody ran to stockpile or they were afraid or they were anticipating something. So in the mortgage banking world, it was just trying to take advantage of these rates, and people were and the banks, because of that, they basically said, wait, hold on a second, we need to put a stop to this, and they raised rates. So the Fed came in again and they said, we will do unlimited buying of mortgages, mortgage-backed securities, and commercial mortgage-backed securities. And what it's been doing is it's been creating a tremendous volatility in the mortgage markets, to the extent that if you're buying a house or if you're looking to refinance a house, a lot of the technicalities of what's been going on in the marketplace is literally changing day by day. And I'll tell you that one of the things is that anybody who's looking to buy a house right now, the guidelines are changing, and the manner in which mortgages are being able to be given out to people are changing, because certain creative programs are no longer available. Certain governmental loans, like an FHA loan, which most individuals are familiar with, those are still around, but they have come with tremendous restrictions, or will continue to become restrictive, because there isn't a secondary market, a fluid secondary market that there was in the past. So because of that, banks are just adjusting. And how does it impact and why? The question is, why is this happening? So part of why it's happening is just because economic uncertainty, without a question. But it's also the thing that's underlying a lot of this, and this stimulus and the just immeasurable acts that the Fed is doing and the Treasury Department are doing, is the fact that everybody's afraid about unemployment. They're afraid about how long this will be, obviously. And again, on a personal level, medically, that's the most important thing. And clearly that's something that nobody should, take lightly. But because of that, it is literally putting a stop on life in general. And the retail world is being crushed in front of our eyes. Stores and restaurants for sure, and some retail businesses closing down in certain areas where you can't freely go out, where there's some restrictions. That is for sure having an impact, and jobs as a result. We've seen so many different companies laying off or furloughing their employees and figuring out what will happen in the next 2-3 weeks. Because of that risk and because of that, anticipation, banks themselves are saying, 1 second. So, and we'll have to think about it from a practical perspective as an individual. How does it impact us, and what should our mindset be? But from a practical level, because of this unemployment, things are changing in the marketplace where banks are trying to figure out what is their worst case scenario in terms of payments not being made. So now came in the mortgage forbearance program. And the mortgage forbearance program basically came in, and again, a lot of these things are being dissected and analyzed right now. It's different than what a lot of people believe it to be. It is a forbearance. It's not a forgiveness of your mortgage. A lot of people believe and think that, wrongfully, that if you can't make your mortgage payment, or if you don't want to make your mortgage payment, it's okay. The next 6 months are a freebie. That's certainly not the case. And I was talking to many people, but several people over the last 48 hours who were intelligent, professional, they were employed, and they were fine. And one of them was telling me that he plans on doing this forbearance, and he just assumed that it was an automatic, the same way that many people will be getting their checks from the Fed because of just the stimulus plan. So he just thought it was a given. And I said, well, it's not a given. You actually have to reach out to your servicer and you have to apply, quote unquote apply, and you need to tell them that you have this restriction, or you're unable to make the payments, and you need to affirm, and that's the magic word of affirm, that you're unable to make the payments as you have been in the past. One thing that a lot of people don't know is if your mortgage is not current through March, that means if for some reason somebody didn't make their payment on March 15th, and if for some reason, as things got worse over the last 15 days of the month, if somebody did not make their March payment, they will not be eligible for this forbearance. So that's key, and that's something that many people don't know. I myself learned about it over the last few hours, and that's something that's important. And the second thing that a lot of people don't know is a forbearance not only is not a forgiveness, which I said, a forbearance is something that in 6 months from now, it will be revisited. So what happens in month number 6? Month number 6, you call the servicer back and you say, hi, my forbearance is over. Either I can't pay, I want to go back to being the regular payment plan, or I need to forbear again. And they may at their own consideration re-extend it for another up to 6 months, 12 months in total, or they may just say, no, we're not going to extend you again. We want you to modify the loan, or we want you to pay it all in due. We just want to pay it off. Now, what happens after 6 months for the people who do a forbearance is that payment is due in full. So if your mortgage payment is $3,000 a month, you owe $3,000 a month over 6 months. You owe the $18,000. It is due on month number 7. Most people will not be able to make that payment. If you could not have made it in April and in May and in June and July and August, you're not going to be able to do that then. So it's kind of it's putting people into a situation where they think that they're uncomfortable now, and they're concerned and they're worried, and rightfully so. But for the people who, let's call it, who can pay, and nobody's judging and nobody's analyzing and nobody's defining what is morally or ethically or fiscally a problem, a hardship. But for the people who can pay, the advice generally would be that you should try to make your payments. And we had a mortgage workout specialist who's an attorney on a webinar with me yesterday, and we both agreed that the best strategy right now for somebody who's on the fence is to punt. Basically, just stall a little bit, stall practically. A mortgage payment is not due until the 15th of the month, sometimes the 16th, let's call it the 15th for argument's sake. If your mortgage is not due until the 15th of the month, don't do anything for 15 days. From a practical perspective, it's a good piece of advice because the phones are being bombarded today, right now. There was one little servicer that we deal with, and they represent a small, tiny percentage of mortgage servicing out there. They told us that already through April 1st, that means the last day of the month and the first day of the month, they had about 8,000 phone calls. So clearly people are, I'm happy from one perspective that people are actually making the phone call and not assuming that they are in a forbearance situation. But I'm frightened about the fact that one small little servicer is getting 8,000 phone calls. It's just a sign of the times in terms of either people who have the hardship or people who are trying to take advantage of an opportunity of not paying. And again, I don't care. If something is available and if somebody is eligible, and the key here is that nobody's going to be asking them for documentation. So, but what concerns me and more than me is people in the know. They are afraid of the word affirm, because if you're affirming, it means that the banks at any time will be able to come back and say, well, you affirm, now I need you to document it. So it's yet to be known whether that is something that will come up later on. And the second thing is that it is a forbearance in general, basically, is different than a deferment. Deferment would make me a lot more comfortable, because if you're deferred, then it's basically, on pause, and that's okay. A forbearance, by definition, means you're already in default, and they're giving you an opportunity to revisit this in 6 months and catch up. And that's a huge concern. So you should not take lightly the fact that you go into this forbearance with no paperwork and with no, understanding of what's happening, it's a big word, and people should be mindful of it. So in terms of what the impact would be if somebody goes into the forbearance. The forbearance, what's supposed to happen is it will not have a negative impact on a person's credit. It is yet to be known, and I believe the answer is that the mortgage will be marked as current. The only question becomes, there will be some kind of a notation. So it's not going to be late, clearly, nobody's allowed to do that, but will it be marked as current? So again, there's different there's many opinions out there, but there seems to be nobody who knows with certainty how that's going to get reported. If it doesn't get reported at all, then that's a problem. If it doesn't get reported as anything, that means January is current, February is current, March is current, April is blank, May is blank, June, July, all of a sudden, and then August becomes current. When somebody's looking at a person's credit in the future, they will say, well, what happened over there? Clearly, you're in a forbearance. That can have long-term repercussions, the likes of which we saw in different extremes in the 2008 crash, where a lot of people had to go into these modifications, short sales, things that the banks told them would not have an impact on their credit. And then before they knew it, they were doing these modification agreements, and they were put into situations that they either were not aware of, or they had no choice. So here, after the 6 months, it is likely that the bank will, if a person can't make that lump sum payment of $18,000, $25,000, $30,000. Now, what's getting deferred, by the way? Your principal, your interest, your taxes, and your insurance. So all those things are getting deferred as far as the payment. People don't, and I've had questions, do I need to make my tax payments, my insurance payments? If you've been paying them through the mortgage right now, it'll be paid by the servicer. So now just think about it from the servicer's perspective. They are outlaying all these mortgages for all the townships and all the counties, and they're not getting any money in return. They're not getting any money from the Fed. They put into place for government loans some kind of a line of credit where the banks can go and draw to borrow money for payments that they didn't receive, to pay taxes and insurance, and to pay the investors for the payments that are due to them. So the thing is really a mess. Just to give you a small example, the servicing business is about is about 10 billion. They did about 10 billion in payments last year. If a 1/4% of the mortgage owners don't make their payments, that's about $70 billion that is not going to be made in the 3-month period. That's a frightening number. And what's even more frightening is the fact that the unemployment rate, which came out today, the weekly, every week they report, today's unemployment number for the week was it was 6.6 million unemployed people. So, excuse me. So now there's the concern, and last week it pretty much doubled last week's record of 3 million. So now you're at 10 million. There's anticipation that the unemployment rate can go anywhere between 20 and 30% of of unemployment. So that's why the markets are acting the way they're acting, because they're really afraid that people will not be able to make the payment, and people will opt in to not make their payment because they don't want to. So my advice will certainly be to people, if you can, you should. As I said, you should defer it a little bit, wait until the 15th. And if you're not sure at that point in time, you should also even wait until the 30th of the month. Because at that point in time, either you'll have a better clarity in terms of what's going on in your own job, in your own life, in your own world. God forbid, people who are dealing with medical issues, that paying a mortgage may take a backseat to that. People who are dealing with employment issues, paying your mortgage will certainly take a backseat to that. Nobody should feel at all that there's a stigma or there's a reason for them not to participate in this thing. They actually should. If you need to, you should, and take advantage of it. And it's something that, unless you are looking to refinance your house after you take a forbearance, then the impacts will eventually fade away. Now the question then becomes, what happens if somebody does want to refinance their house after they what happens if somebody goes into forbearance after they refinance? A lot of a lot of banks are not letting you refinance if you were in a forbearance. So just keep that in mind. So if somebody in a forbearance for even for a month, and then eventually want to refinance, they won't be able to. So it does come with some stigmas. Then in terms of just in general, so where does that leave the housing market? Where does that leave people who feel that they're just really uncertain in terms of the change in the marketplace? The answer is, unfortunately, until we know what happens over the next couple of weeks, clearly from a pandemic, from the coronavirus perspective, in terms of peaking and seeing things level off. And just as an aside, and I'm happy because I'm recording this just to go on record as saying that um, I was told by supposedly a reliable source that New York, New Jersey might be in a forced lockdown very soon. So this past Saturday night after Shabbos, I looked at some of my emails and messages, and I saw a tweet from President Trump, which said that he was considering it last week. I don't think a lot of people were expecting or ready for that, and especially when it came off the heels of him saying that parts of the country may be opened by Easter or the 12th. And supposedly it's been reintroduced and it's in discussion again. And that will only further exasperate what everybody's thinking and what everybody's feeling and the damage that's being done. So the short answer is it's very hard to predict where things are going to be until we see things peak or we see some kind of a change. Now, what that change may look like, some people will argue that it will be a V-shaped recovery, a big crash down, and then as President Trump said, there's pent up demand and everybody's going to just go back to the races on day number 2. I hope. I don't see it that way. I don't think that people will be able to forget about the human psyche, which may change. I just don't see that people will be able to quickly rebound. And I don't know that people are going to immediately start spending and luxuriating the way they did in the past. So I say that because I want to tie into the real estate market in general. So in terms of the real estate ownership and values, where does it look for that? Again, nobody can predict, nobody can speculate, but one of the charts on one of the topics that one of the webinars that I participated in from experts who've been doing this for decades and decades, they went back and they charted out what the real estate market looked like in terms of values after every single recession or crisis that happened over the last 30 years, I believe. And 2008 being an exception, almost all of them did not have a negative impact on housing prices. So take it for what it's worth. I'm not sure because I think what will happen in this marketplace, and I certainly don't want to predict or speculate, I think depending on how bad the unemployment rate is and depending on how bad the economy is, that will dictate how quickly prices stop dropping. Now, why will home prices drop? Home prices will drop in theory because if people don't have jobs and they have to sell their house and they don't want to be foreclosed on, or even if they are getting foreclosed on, God forbid, they will keep lowering their price to get quick buyers and quick sales and etc. So that's where there is the potential for home prices to go down. Where that will go, how far it will go, nobody really knows. So if you're asking me, my personal advice, should somebody be selling their house now, let's say, if a person's question to me is, if I have to sell my house within the next 6 months or 12 months, should I sell it today? My answer is, unfortunately, today you can't sell your house. I mean, even though real estate agents are running around and trying to do business, there's certainly not a lot of show homes in the manner that they were doing it in the past. You can't do an open house. Questions we've had were, can we do the virtual houses? Can we do Facebook, FaceTimes with? You can take videos and you can do them in an amateurish way. I think what a lot of people are, you need to look at it from the perspective of, if you're a home buyer today, will I want to buy a house today? So then my answer to that will be, let's say you're in an industry where you're safe. You're in an industry where you're not concerned about your job. And I have to tell you, I'm doing a surprising many amount of purchase deals that are, thank God, all going through. You would think that in a time like this, people would basically try to renege on some deals, would try to back out of some deals. I don't know of any deal that I've been working on, with the exception of one, that they basically agreed to terminate the deal and everybody walked away and they called it a day. Other than that, deals are definitely going through. I was on the phone with a couple, a first-time homebuyer couple last night for 2 hours who they wanted to go through the motions of the pre-approval and they're looking to buy something. Part of the mechanics of that is we need to pay rent. If you plan on paying rent, again, we're talking about the majority of Americans who will be able to make some payments and be able to function after this is all done is a majority. It's a majority. So to make everybody, feel a little bit more at ease, people will be impacted, and it is horrific and it is horrible. But at the end of the day, when we say the recovery will be quick, it could be because there will be people who say, okay, we dodged the bullet. Things may change for me psychologically, but we need to go back to doing what we were doing. Certainly, certain lifestyles and the way people have been living might change, but people are quick to forget. I remember in 2008, people said the world will never be the same. And I have to tell you, the world completely forgot about what happened in 2006, 7, 8, 9, 10. That's not why we're here today. This is like the perfect storm where you have one pandemic that is literally crippling the medical and the fiscal and the banking and the economical industries literally across the board. So we had that in 2008, and certainly don't want to compare and contrast it. We didn't have a medical concern at that point in time, but we had a lot of the things that we are experiencing today, and people bounced back, I would say, relatively quickly. So to the point of selling, if as the quicker we get out of this, which is obvious, the quicker it will be where home prices will not be impacted. I don't think home prices, just to give you a street level view right now, I have not seen that home prices have been impacted. And you would think that within 30 days of this catastrophe, things would have already started to soften. I'm not talking about isolated, incubated areas that people might be in, or sects and pockets of. For the most part, home prices seem to be stable. Part of the reason for that is because interest rates are so favorable that it's making affordability of these homes really worthwhile for people. Separately, the lack of inventory on the marketplace has been hurting real estate already for the last 2 years, which is people don't have homes. There aren't enough homes for buyers. And not only that, not enough homes, there's not enough on the market that is fulfilling the needs of everybody that wants to buy a house. So to the point of, if somebody puts their house on the market in 3 weeks and 6 weeks, if your house is presented properly, if your house is set up to the point where it is providing value to people, then there will be buyers. I personally think that the luxury real estate market that we've seen in the residential world of $1 million homes for as starter homes for people, that's something that was a phenomenon in my career when I started, and even myself personally with my wife, we bought a starter home like almost everybody else prior to us. And you bought this starter home for X amount of dollars, and then eventually you trade up, and that's what you do. Over the last 5, 6, 7 years, I've seen a huge shift of people waiting a little bit longer than maybe we did in my day. And I'm only a few years out of the millennial category. And people waited a little bit longer to buy that house, although that has declined. And they ended up buying the $1 million home, or the $1 million plus home, or the $999,000 home. I think that may change. I think that people will possibly say, look, we don't want to be, and I've seen this trickle over the last, people don't want to be house poor. They don't want to be in a situation where they feel themselves in now. And for many people, and this is an amazing stat, and I would say should give a lot of people comfort. Different now than where we were in 2008 is the fact that there's so much equity in the average home today. I would say for the most part, 60% of the homes in America have at least 30, 40% equity, 35% equity, something like that. So that is tremendously encouraging for the housing market, for the real estate market. That means people won't be desperate to sell, and they will have equity and they will walk away with some money. Do you lose some equity if prices go down? Surely. You gain equity as you make your payments. So if people use it as a I would say a opportunity to say that they will adjust the mindset of not buying these luxury homes and not to overextend themselves, they'll probably look for cheaper homes, which I believe will make contractors and builders have to probably build cheaper, and or you're going to see a lot more of the renovation type, where you're gonna have these flippers will come in and renovate a 3-bedroom house into a 5-bedroom, and it won't be a ground up construction, but it'll be something that is a little bit more affordable for people. And we also think, and this is not just me, people think that the suburban life in general, just the quality of life will change, because people will say, look, I've told my kids they can kiss their snow days goodbye, because now that the schools have learned how to work remotely, if there's a snow day or if there's, I don't know what, too much rain out there and they want to cancel school, you're gonna have a regular school day. So I think from an employment perspective, you're gonna see the same thing. A lot of people will be working remotely more often, maybe the Fridays, maybe once or twice a week. And because of that, they will want that quality of life, and they will want that home. So I think the real estate market is going to be tremendously strong as soon as we stop bleeding in terms of the world. And once that happens, things will kind of stabilize quickly, and it's going to be a supply and demand thing, which has always been, and people will still buy. I mean, you do have 25% of the people, maybe, hopefully not, 20% of the people that may not be able to. But I'll tell you, surprisingly enough, at least for me, dealing with first-time home buyers, about 30% of my clients have been getting mortgages with, and it's probably more, with help from a family member. That means help from a family member towards their down payment, help from a family member towards monthly payments, or committing to a certain amount of reserve for that. And it's helped people go into homes that either they could not have otherwise. And I think the same thing may happen today. Yes, hundreds of millions of dollars have been wiped away in terms of maybe stocks and equities. Time will tell in terms of how quickly those rebound. Look at what's happening in the stock market. We went from a bear to a bull to a bear. I mean, the markets are quickly changing and extremely volatile, and it's still comforting enough to know that people are level-headed about it. So to me, I'm optimistic. I think that we're going to see tremendous opportunity. I think what's fiscally changing, and I've seen it already speaking with people, fiscally, people want more reserves. They want that cushion. They want to say, well, first of all, we're getting a lot of people who are inquiring. Everybody knows and everybody thinks you want to refinance. Rates are low. Rates are under 3%. Rates were under 3%. We actually gave some people rates under 3%. It was a few-hour window, literally, maybe a 12 to 24-hour window. And then after that, as I said earlier, rates jumped back up to even over 4%. Now they've stabilized in the mid-threes. So 3.5%, I'd say the range is about 3.25% to 3.5%. And we're still getting a very active, productivity in terms of people who are trying to refinance where it makes sense. But even more than that, what we're trying to communicate to people is either debt consolidation. A lot of people surprisingly are mired in debts, a lot of debts that have just accumulated, and they don't realize that it kind of just happened through progression. And if you sit there and you do and I'm gonna kind of start winding down, if you do your analysis and say to yourself, well, where's my life right now? You have to start tackling certain areas of your life. And if credit cards are, and even if it's 20, 30, $1,000, those are numbers that you should, that's a bad debt. What is a good debt is a mortgage. A mortgage is a good debt because it's deductible and it is cheap and it's locked in for 30 years. If you have a credit card, those interest rates are double digit. If you have a home equity line of credit, that's a variable rate. So we're encouraging people to just analyze and do an analysis of what they have, their debts debts can be student loans, debts can be, anticipated things that need to be done, weddings, or hopefully a lot of these things will change in terms of, in terms of, um, just outlays and lavish expenditures. But regardless, if somebody knows they need to do construction, now may be a good time to pull some money out and lock in for a 30-year mortgage and lock that in. Now may be a good time to cash out and put reserves in your pocket and then maybe into the markets. Again, I'm not giving financial advice, and I'm certainly not here to pitch business. I'm here to try to just help people pivot and figure out strategies that may make sense to them. And for us, what we pride ourselves on doing, we're not a drive-through. We're not a drive-through. That means we're just not. We don't have app. We have technology that almost everybody has, but what we pride ourselves on doing is sitting there and working one-on-one with each individual, talking about their short-term and their long-term objectives. And I think that's the most important part of the process in terms of trying to figure out how somebody's going to adjust to what's going on. So to the question of with respect to pursuing a forbearance program, is there a different set of consideration if you are in the early stage of your loan and are paying mostly interest versus paying largely principal with respect to the forbearance program? In terms of the practical or the impact from a perspective of doing the forbearance, or does it make more sense to pursue it if you're earlier in your mortgage versus later? I would say the forbearance program, the mechanics of the forbearance program are exactly the same, but the consideration whether somebody should pursue that should strictly be whether they can make the payment or not. If somebody's looking at it as a way to preserve some money, then you can do that. Again, in 6 months from now, the bank will come to you and say, how are you going to pay us back? And even if they spread that over the life of the loan, which they don't have to do, they might do, that's okay. So if somebody says to me, if somebody's willing to say, look, I'm going to forego 6 months and then I want to spread it over the next 30 years or whatever it is, that could be a direction. But I would say you have to look at your own personal situation and say, can I make the payments? Whether or not you don't want to make the payment may be different. I think what I've seen over the last couple of years is if somebody can't make a payment, let's take away these forbearance programs. In the past, a year ago, okay, markets are running smoothly. If somebody couldn't make their payment, they got a letter from the bank that said, look, you should start applying for different programs and different options and tell us why you can't. Let's talk to you. Let's work it out. So a lot of the mechanics in place that have certainly been catapulted to the front of the line have always been in place. Banks don't want to do it. Banks don't want to take away people's houses. Banks will always modify your mortgage. So to the premise of, to the thesis of, I want to opt into this forbearance program because I'm afraid I won't be able to make the payment. I don't know that somebody should do that. You don't want to voluntarily, just put yourself into that category. I also think it's a mindset. I think again, somebody can't do it, they can't do it. I don't think you count. I don't think you worry about stigma or repercussions if a person can't. But if they can today, I wouldn't worry about tomorrow, because even if, and I'm not saying that tomorrow we're going to be optimistically recovered and the economy is going to be booming and thriving. I'm saying no. Look, even if a person loses their job, God forbid, there are systems in place and there are ways that the bank will work with you even in 3 months from now. That's why I'm not encouraging people to jump on the bandwagon for the forbearance unless they have to. And in terms of the impact that this pandemic is having on refinance opportunities and new lines of credit, banks are lending, but the biggest part of it is there's just a capacity issue. There's a physical capacity issue where they just have a limited amount of hands on deck, where they just don't have enough hands Clearly, they don't have any hands in the office, but people are working less efficiently outside of the office. In terms of money to be lent, if a person's situation is streamlined and they are eligible for a conventional mortgage, that market is pretty much business as usual with a bunch of asterisks. What does business as usual mean? It means there's an adjustment to verifying people's employments because many employers are not readily giving information. They're not even open. Some of them are working with one or two staff members and completely backed up. So there are accommodations to try to streamline that process and accommodate certain things. Governmental offices are closed, so we can't even verify somebody's tax returns with the IRS. So that has kind of been pushed to the side where there's no longer requirement and people are basically taken at their word. If they provide tax returns, then we believe those to be authentic. God forbid if somebody provides false tax returns, this would be a great opportunity for them to try to pull a big one on the banks because nobody's verifying it. But again, if somebody wants to do fraud, they could always do fraud, but it's a little bit easier to do it now. And at the same time, though, what is a little bit more complicated is some of the higher risk loans. Home equity is a higher risk loan because it's a secondary lien. It's a second position on a mortgage. And we've seen banks tighten their requirements. It used to be maybe, a few weeks ago, you were able to go up to 90% of your home's equity. Today, it's been cut down to 85%. Is it across the board? No. But banks are going to be very conservative about it. They're going to make sure that their appraisal is extremely diligent in terms of the value. So because values are right now at a standstill and unknown, the banks are going to tell their appraiser not to be more conservative, but they're going to say, well, is this area a declining marketplace? And certain areas that are defined as a declining market, which should be almost everything in the United States, then they will reduce the amount of loan or the percentage of loan that they're willing to lend. So I do see that as being, even though it's not implicit today in the guideline changes, it will be practical in terms of how loans are approved for the riskier loans. Again, the higher loan to values as well as the lines of credit. Other than that, your conventional world is working as efficiently as it can and quote unquote in the new norm. And things are getting through the process. And that's why we're very optimistic in terms of real estate happening. I think that the realtors, and I'm very active in the real estate world, and they were literally weeks ago, they were touting how spring has come early. And in February and March, they were talking about how homes were going on the marketplace and there was going to be a very active early spring market. And I'm not saying that spring market will happen and whatever, but eventually, as we're released from our homes, people will be a little bit more interested and willing to dabble back into the real estate market. And I don't think that it will come right now. People are, when they put in offers, they're saying, look, if this house has been on the market, everyone's trying to take advantage, I guess, from their perspective. Buyers are saying, look, if the sellers are anxious to sell, who knows what's going to happen in 3 months from now? They should take my lowball offer. And a lot of sellers are saying, look, I don't need to sell, and I'm not going to. So you're seeing the same healthy negotiation that you always see. Sellers who need to sell are negotiable. Sellers who don't need to sell, and again, because there's a inventory problem, there's not enough homes on the marketplace, those people are just saying, look, I put my house out there. And if I get my price, I get my price. If not, not. Again, as the unemployment situation unravels or changes, that may put more homes on the market, or that may put a little bit more sense of urgency and aggressiveness. So anybody who's considering selling, somebody who needs to sell, I would definitely say that they should start talking to realtors and start prepping things on what needs to be done. And at the same time also, and I believe I even had conversations with some of you on the call years ago about this, which could be a good investment opportunity. Just rent your house out and wait until the market stabilizes and goes back to where you think it needs to be. I had this conversation with people yesterday, and I'll kind of end on this, but in terms of in terms of home buying, we went through the mechanics yesterday, and even if you were buying a home today, and the mortgage I did with them was about 300,000 of a loan. So on $300,000 mortgage, $500 a month is going towards principal. So, you're talking about a nice, healthy principal pay down, even though everybody knows that, you're paying mostly interest in the beginning of your mortgage term. But with that in mind, it also gives people a little solace in the fact that they're kind of building equity. And my thought process is, if you put 20% down and you buy a house for $400,000, you don't need to necessarily need to sell your house for the $400,000 in order to be made whole on the amount of your down payment. So if your down payment was $60,000, you may be able to, because you built up this equity in the house, even if the house is at the same price that you bought it 5 years ago, 10 years ago, because you've paid down principal, you can now sell the house, God forbid, at 380 and still walk away with more than $60,000 or $70,000 that you initially put in there. And I think that's a very important point. And I've been saying this to a few people, and a light bulb went on for some people, because that's the point. The house is not if you're using it as a investment vehicle, then okay, you want to get in, there's an ROI, you need to make sure all the numbers work, and you have to figure it out that way. But if you're looking at it as, I'm investing, I put in my 60,000, I've lived here for 5 years. There's something to be said about living in a house for 5 years or 3 years or 4 years or 2 years or 10 years and not having to pay rent, and to be able to sell it and put your take your money back out and some. So I think there's a tremendous solace in that. Tips for market social distancing. I would love to have a conversation. I would love to have a separate, unless you specifically want me now. It's almost an hour. I have a couple of realtors that I work with who have excellent strategies and insights, and in terms of what should be done now. I think that people should use a realtor. People should use a realtor when they're looking to sell their house. I think it's even more restrictive now, in spite of the fact that realtors don't have the same access and the same resources that they did yesterday. And for the most part, what I've even seen is some realtors have asked the homeowners to do those tours. So the homeowners are thinking, hey, why do I need a realtor? I'm doing half the work anyway. There's so much more to selling a house than putting some pictures on Zillow and putting it on social media and trying to get it out there. There's no doubt in my mind, it is factual that realtors bring a lot more value than even their own commission is worth, and even more so in this marketplace. But there's definitely tips, and I'd love to give you offline. I'll end my point with conversations that I keep saying over and over. And to anybody who's going to listen to this from my office, it's going to sound repetitious, but I look at navigating this unprecedented time with a GPS. You need to use your GPS strategy. And GPS strategy in my world is gratitude. You start with gratitude, and every day, literally, you need to surround yourself with positivity. You need to distance yourself. There's social distancing, and there's all these restrictions that we have in place, and we're kind of confined to our own little, four walls. But you need to insulate yourself in any way possible from the negativity, from the people who are pessimistic. Obviously, the people who need help, we should help them. We should support them, and we should be their rock of stability. It starts with gratitude. So you need to, every single day, start the day with your list of things that you're grateful for, literally one by one by one by one. And I was saying that today, one of the symptoms of having the coronavirus is somebody can't taste. And there's a bunch of different symptoms that different people have had. I put on my list, taste. When I heard that, I'm like, look, I can taste. I tasted my food. So I have my gratitude list. I go through it. It gives me hope and optimism, and it shows me how blessed and fortunate I am in spite of all of the chaos that's going on. And then the GPS, the P is prayer. You have to pray. You have to sit there and you have to just isolate yourself. Certainly, if you're a religious Orthodox Jew, you're doing that. You should be doing that. You could be doing that. And you're praying to God and you're saying, look, whatever it is, as quickly as we got in here, I have faith and I have confidence that we can get out of here. And at the same time, we need to know that everything is for the best. as crazy as it sounds, it's everything is for the best and everything will be for the best. And the P also can be positivity. You have to anticipate good. And that's what I'm saying. To me, just from a personal perspective, somebody who can make their payment and doesn't make their payment because they're getting quote unquote free money, I think you're not looking at it from a, again, you have to manage your money and we'll get to that in 1 second, but if you're positive and if you say, I can make my payment, I will make my payment, I'm going to make my payment, somebody without a job can still be doing that. So I truly believe that if you pray and if you have the faith and the belief that God will help you, and if you're positive about it because of that faith, that will help you. And that's the G and the P. And the S is strategize. You need to strategize. You need to have a strategy. You need to get onto webinars and Facebook groups that talk to people. And again, to your credit, Miriam, to put it together and to have so many people in the group where people are just thirsting for information, whether or not they're asking and raising their hand, they're thirsting for it. So you have to strategize. You have to, again, if you're a religious person, to me, I look at it as a hishtadlut, where you have to put in an effort. I can't just say, I have gratitude, I can taste, my taste buds are working, I have faith, I pray, and I'm positive I'm going to make my payment, but I'm just going to sit here and say God's in charge. And if you do that, you will certainly not be as successful as somebody who actually uses the S for strategy. You strategize your personal life, your professional life, my how do I want to see, how do I envision my family relationship, my financial relationship, my debts, my credit, my tuitions, my vacations, my all those things, and you have to strategize. How do I want to reevaluate my life now? How do I reevaluate my employment, my career, where I was going, what I was doing? I have an 18-year-old daughter who's in her senior year of high school, and she's literally missing out on what's supposed to be one of the best years of your life. Senior year, going places, doing the different things that you need to be doing, and she's cooped up in a house with a bunch of us here. And to her credit, I'm watching her like thriving. She planted a lettuce garden, and she's growing lettuce for some strange reason because she saw online. She's baking, she's cooking. She has a Instagram page that she's doing recipes and healthy things. She's literally looking at it as, I have time, I can sit here and wallow in sorrow, but I'm going to make the most of it, and I'm going to do the things that maybe I wasn't thinking about doing, or things that I was aspiring to do. And here's an 18-year-old doing it. And clearly the 18-year-old, what's amazing about it is, and that's why I'm specifically saying this to a group of millennials, the 18-year-old doesn't have the filters, to use their vernacular, whatever. They don't have the filters and the life, the baggage of life that the rest of us do. So the millennials have it, and then the older generations have it, and we all have baggage of experience of life, and just just a weight that we have, and a certain just attitude that we have of just being pessimistic, or seeing such horrible things that have happened or gone through so much. And the 18-year-olds and the other ones, and people who are just a little bit more optimistic, they don't have those experiences. They're looking at life in a completely different way. So we need to kind of use that to our advantage and say to ourselves, well, if I didn't have my past life, use your past life as experience, not to weigh you down, but to help you strategize, which is my last S in GPS, strategize and plan. There's no better person. It's the same way that Miriam called upon me to sit here and to try to talk to people from my experience. I have experience because I've done this more than other people who may have been doing this. I have many years doing it. So take my level. I look at it as, from my marching orders are, take my experience for the good. Don't take my negative experiences and assume worst case scenario. When you assume worst case scenario, your lens will change, your attitude will change, your perspective on life will change. You will assume the worst, and then you will end up stepping into that direction because you're constantly going to be on defense mode rather than being in strategic mode. So that's really my advice in terms of just using your GPS and making sure that you can do whatever you can do to stay healthy, not just medically healthy, which is first and foremost, but mentally, emotionally healthy, to really make yourselves as level-headed as you're making some of these decisions. Speak to people, get advice, get consultations one-on-one, getting webinars and information. First of all, just you need to trust the person that's giving that. There's so many people that are just commentary. People are just spewing things. And just because something, and I tell this to my kids and clients and friends all the time, just because something is on the internet or on someone's social media post, even if they have 50,000 followers and even if they are verified, it doesn't mean that it is a fact. It is an opinion. And if you don't like their opinion, go find someone else whose opinion you do value and you are like-minded with. And to me, that's the takeaway. Find like-minded individuals who will help you navigate through this uncertainty and take their advice for all the different things along those lines. Any other questions? Feel free to unmute yourself or comment. Other than that, I'm going to unrecord.